Yeah, JB Hi-Fi had their interim results yesterday. The first one in my sector, and often seen as a bellwether for consumer discretionary stocks. It was better than expectations. So our NPAT forecast was beaten by 6%, and the market responded positively to that, taking the shares up by 7%. So a good outcome, but don't be under any illusion that the environment is anything other than challenging for retailers. It is. Consumer spending has been subdued for a while. Although there were hints of optimism in the comments from Terry Smart yesterday. I think if you look at the result itself, the earnings were down year on year, which is a consequence of slightly softer sales, but they were only down by 2%. And of course, the fixed cost operating leverage that you see with any bricks and mortar retailer means that earnings are always going to be down by less. But they were down by 20% in terms of NPAT, but that was less than we'd anticipated. So if you look at how they achieved that, they talked about resilience in terms of their market position, but also when asked about how they managed to achieve the cost control, they just said, look, we tried really, really hard. But to quote Star Wars, do or do not do, there is no try. So looking at the divisions in more detail, JB Hi-Fi Australia was really the powerhouse, as it always is. It performed exceptionally well over the promotional periods of Black Friday, Cyber Monday and Boxing Day. Particular strength in mobile phones. They indicated that people were paying more for the mobile phones. They were going to more premium models, and also the ASP for these things is going up all the time. There was increased floor discounting, which is something that JB Hi-Fi is obviously known for. That is back to pre-pandemic levels now, so it increased steadily through the course of the half. So we're not out of control here, but it did, of course, weigh on the gross margin, giving people better deals. And they did say that they encouraged their staff to lean into this. And so if you do go to JB Hi-Fi and say, look, I can get this cheaper somewhere else, they will always match that. The other thing that they said was around staff productivity, in that consumers are doing more online research before they go into stores, so they're coming in better informed. What that means is it shortens the sales process and makes them able to deal with the customer and move on to the next one more quickly. So that is a structural change, and one of the reasons I think that you're going to see JB Hi-Fi's margins in the future higher than they were pre-pandemic. JB Hi-Fi New Zealand was all over the shop, as it always is, but it's subscale. They have less than 20 stores. They have a strategy of trying to grow their market share in that market, which is pretty competitive. And that's what they did. If anything, they overinvested in staff over the course of the half, trying to really up the level of customer service. And so that did push them into a small loss. Now, this company is tiny in the scheme of JB Hi-Fi, this business, sorry. But it was a concern that they moved into a small loss. And I think they will make another loss in the second half. So clearly a little way before New Zealand starts to deliver positively. And then the Good Guys, compared to JB Hi-Fi, which was much more resilient than people have thought, the Good Guys in terms of sales was pretty much line ball with expectations, so down 10%. Which is pretty much exactly what we'd forecast. But that was all driven by consumer electronics. Home appliances actually did really well. So fridges and laundry and the like. And the margins are better in home appliances than they are in consumer electronics. So it really pushed the gross margin up for the Good Guys. And that was probably the biggest surprise of all of this, is the fact that the gross margin, the Good Guys, actually increased slightly, 16 basis points over the course of the half, which is really quite impressive. And that's echoed also by Breville's results this morning, where they were soft on sales, but managed to make it up for with higher gross margins in that appliances category. Just finally on the balance sheet, JB Hi-Fi is exceptionally strong balance sheet. The net cash at the end of the period was $488 million. And when asked what they're going to do with this, they said they're going to sit on it for a while, sort of counting their cash and feeling pleased with themselves. But they can only do that for so long. I think come August, we may well see that there'll be some capital management. I wouldn't be at all surprised to see them go for a special dividend. They do have oodles of franking credits, but they may also consider M&A. They were questioned about this on the call and certainly would not rule it out. And it's been 7 years, more than 7 years, since they bought the Good Guys, which was a massive acquisition, $870 million. And so it could well be time for them to go again on M&A. So I suspect that's something to watch. So we are getting a little bit more positive on the shape of earnings for JB Hi-Fi. It feels as if the worst might be over. They're certainly talking about the January acceleration in sales being potentially indicative of a more optimistic consumer. It is very early days to call that, but there are some very, very, very early signs, some green shoots perhaps, of recovery in consumer sentiment. And so if that's the case, then that would be positive for all of these guys. We took up our numbers by 7%. Staying on a hold, it's on 16 times, even on our updated numbers, which feels full to me for this business, given it has no long-term organic structural growth at the top line. So not prepared to chase it at 16 times, but this is a good result from a quality retailer. And in terms of what you might think in terms of the read across, the key thing here is that if you have a strong market position, if you're known for your category, as JB Hi-Fi is for technology, people will go to you. So the stronger retailers are going to do just fine, particularly those that can lean into the current very promotional environment. So if you're Lovisa, if you're the Reject Shop, if you're Accent, if you're very good at promotion, you're likely to outperform others. The other thing to really draw out of this is cost control is absolutely crucial. And if you are the sort of business that can control your costs exceptionally well, like an Accent Group, for example, or like Universal recently demonstrated, then you're going to do quite well. But if you can't, if you allow your costs to get away with you, as I suspect that Adairs will, as I suspect you might see at Baby Bunting in the months ahead, these companies are really going to struggle. And you'll be surprised by just how significant the operating leverage can be. So it's a real separation of the winners and the losers, I think, over the course of February. But JB Hi-Fi is a winner.